What's up, YouTube? Today I wanted to talk a little bit about the flash crash that we've all been hearing about at Coinbase and with Ethereum and all the other altcoins, and also about the flash crash in gold. The two events are actually very similar to how they happened, and which is basically a massive sell order that triggered a bunch of stop losses and margin calls. If you trailed your stops, you would have gone out early, but if you didn't keep track of your investments, that would have triggered all the way down to where you left it. And with people who forgot, based on Ethereum's meteoric rise, are the ones that ultimately got taken. Now, we all know that you shouldn't really be leveraging on margin calls and not taking care of your stop losses. But when we look at the chart, this is for 30 days. So starting May 28th to June 26th. And you can see the price going from 158 all the way up to 414 and settling where it is right now at 265. So within a month, it's still up $100 from where it was a month ago. The euphoria that we are seeing is ultimately the cause of it. And people were buying, and not really taking care of it, just thinking it would continually go up. If you noticed in my last video, I said I saw a plateau and it was just kind of stuck there, bobbing there. So that was my cue to move out some. So getting back to Coinbase, it's really ultimately the fault of the trader because they could have stopped it. If you didn't have stop losses, or you had high stop losses, or you didn't borrow money, you were unaffected. The cause of the crash itself was from a huge $30 million sell order that triggered 800 or 900 stop losses all the way down and buy orders all the way back up. Now, why did it only happen to Coinbase? Well, my assumption is that Coinbase looked at their own inventory before going out on the open market. So they were able to fill all their orders in-house before needing to go out. What was surprising was Coinbase actually decided to refund the traders for being irresponsible, but it is one of these warnings because there are a lot of new investors. So when they say they did this as an act of goodwill, I believe it. They also got a lot of free press, but you're not hearing it from very bullish PM channels. Actually, you're only hearing about the crash and not the fact that they decided to pay out $27 million from their own pockets. We'll see later on. What basically happened today was a flash crash in gold from a $2 billion sale order that triggered a bunch of stop losses as well. So just to give you a review, what ended up happening earlier with the 20 and 30% down has recovered for the most part. Mostly recovered. It's not 100%, but it's not too bad. But look at this. What do you know? It fell off a cliff. When you have a vertical drop that fast, it's ultimately the same thing. There was a huge buyer that sold $2 billion worth of gold, and not even in cash. It was all leveraged. And that's the biggest difference between the metals market and the cryptoverse, which is the leverage, which they're starting to add in. This leverage allows the market to stabilize because it lets people catch things a little bit faster and let it kind of ride it out by buying time, where in the crypto world you actually have to back everything, all your purchases, with actual currency. If you also take a look at the current list of ICOs, you'll also find that it's not too different from the PM silver market. You'll see some of you might remember Tulving. I remember just getting in or hearing about this. It was also some people using leverage and cycling what they didn't have. They had your ID. More recently, Penn Metals. Everyone sent in their information. They knew who you were. And we all remember Northwest Territorial Mint from last year. And the list goes on and on with the different HSN networks, or CPN or CSN coin shopping network, or Franklin Mint, or all these other companies that kind of go after people who don't know, who want to invest, right? It's up and down. It's pretty much people who want your money. And if you're in your 20s, several of you have been through several crashes already, and will notice similarities between the 2001 dot-com bomb, the Great Financial Crisis, the PM metals pump and dumping. It's actually all more similar than it is different. And One of the main differences this time is that it's global, and whether or not that's enough to battle the banks, that's going to be the question that we're going to want to see. The rise of cryptocurrency is really the rise of the people telling the governments and the banks that they're tired of them playing with their money and their wealth. And of course, there's also people who are just trying to get rich quick. You can't get rid of them. Once they see a rocket ship, people are going to jump on. It happened in silver and gold. It's happening with crypto. The way I approach this is to take money off the top every now and then. And if I'm on it, I'm on it. If I'm not, I'm backed away. And right now, I'm kind of backing away for the time being just to get a look to see where everything is at. I'm not in a rush like some other folks. And some of you can tell that I'm a bit more conservative than some of the other pumpers. I do have a lot of problems with Ethereum blockchain and blockchain in general. The business models don't work out for me. Overall, I'm bullish on it because out of the dot-com bomb came Google, Amazon, PayPal, eBay, and even the great financial crisis had Uber, Facebook, Lyft, Airbnb, Netflix. So every single time there's been a paradigm shift in technology, there's been a cohort of new companies that survive and thrive. It's a very hostile place for investors, especially new investors with the volatility, but that's what people like about it because it can make you a lot of money fast. And let's be real, there are definitely some whales and pumpers and dumpers in the space. It's no different than gold and silver. No one should really rely on a single basket anyway, because gold and silver is manipulated, crypto is manipulated, the stock market's manipulated. We're all kind of screwed. The best we can do is to do what we can and protect ourselves at all times. And you should as an investor, especially in crypto space. And it's less so in the gold and silver space, but just don't get carried away. That goes in all spaces. But there's a delicate balance where you should have your hand in the baskets that produce eggs for you. So let me know in the comment section below what you think of this format, and we'll see if we can do it again. Thanks for watching. I'll catch you on the next one.